Easily could come up and take the highs first, but as of right now, I'm looking at these lows that seem to be engineered, and then below that, we have this discount inefficiency, new week opening gap. I called this out in the Discord already, and we'll see if we can't key something off here now that we reprice. So you look here and see that we're dropping down to this 5-minute inefficiency, but really I would like to see us continue on past that through opposing a raise. That's the only thing that would, that's the last thing I would need to see for to try to get short to the opening range lows. So you guys know what I'm looking for. Everything has been called since the beginning of the morning. It's just a matter of if I see those key signatures that I would like to, you know, get in with live funds with or not. But anyway, one more minute till we open on that 5-minute candle. I'm just going to look to see if we can retrace into a 5-minute inefficiency. At that point, this would look something like 5,001, and stop loss would have to go right up here. Alright, so we just opened on that new 5-minute candle. Beautiful. Up into the 5-minute inefficiency, right? So I'll look to get short here. Alright, so there's that, those lows pierced. Alright guys, so you just saw what took place in my live stream today. It's what we do every single day, every week. It's not going to stop. And we'll keep it rolling. But let's get straight into it. I'm going to review today's price action and specifically show you how did I know. Alright, so you saw me calling everything out ahead of time and delivering. But how did I know that was going to take place? Well, let's get straight into it. So, not going to key too much here on the daily time frame, but I'm going to go ahead and bring your attention to this daily inefficiency here, just because I'm going to be, this is what I was referencing on those lower time frames to key in on today's price. So, straight to the hourly time frame. We'll ignore this because this is the PM action. We're specifically focusing on that New York kill zone, okay? So, right away, we get in here and we see that we're coming up off of a very large range, CPI, right? Down movement. Swept that previous week low down there. We now opened on midnight today. We came the whole way up into what? A deep premium. Let's take our fib from that CPI high to the low that we made. We'll see that we're in 60% to 79% retracement. That is our optimal trade entry range. Okay, so that's key when we trade into those with the proper narrative and context, which we did have. So, hourly time frame. We trade the whole way up here to the daily inefficiency high. But the important thing is we aggressively traded up off of that and closed not even close to the high. So that's the first signature. Now, let's go ahead and flip over to NASDAQ just because it looked a little better in terms of the discount inefficiency. Now, what do we have below market price after we're in that optimal trade entry level? We have this large discount inefficiency left behind. But what else do we have? Well, if you saw the clip, we'll go to ES and we'll see we have these relative equal internal lows. These were engineered at the opening range. So automatically, as soon as this sensation takes place, sell stops are going to go right below here. Okay? And they drive it up a little bit and ultimately slam down into that as we anticipated. And what else do we have? We have this discount inefficiency below market price. So when I say discount, I'm using this range right here. Okay? Or sorry. And when I say discount, I'm using this range right here. The midnight low to the high. Okay? We're in a deep premium looking for discount sell stops, discount inefficiency. And what else were we looking at? Well, we have new week opening gap, which does what? It yields fair value for larger funds. So we draw to that like a magnet, and you see the precision on that. Switch to the regular trading hour. We had a large regular trading hour gap left behind. Price loves to reprice into those. Okay? So basically, without going on too much longer, we basically just had a lot of untapped discount arrays that, were likely to be traded into. So getting into it more, I want to go back to NASDAQ quick and show you when we traded up here and we took the buy side liquidity out of the marketplace right here, see these highs? We swept that, but we also traded above that CPI opening. Okay, so that 830 opening, that is key, and we monitor what we did once we reached that price point. And what did we do? We created this up close candle. We completely traded below that. That'd be our change in the state delivery. What do we do after changes in the state delivery? We seek opposing sell side liquidity pools. So down here and here. And that's exactly what we did. See how we open on this 15-minute candle, roll up into this up close candle. That accumulates short orders and then distributes them to the downside. So let's go back to ES. Same thing. We have buy side liquidity up here. That was taken. Now, as I was saying to my members real time, just take a look at this chart. You don't even have to have a great understanding of trading to realize this is common sense. Look at the chart here. How many times has buy side been taken? Once, twice, 3 times, 4 times, 5 times. How many times has a significant low been taken out? Not once. None of these lows were taken out. So by default, whenever time aligns with price, we can reasonably anticipate a run on sell side eventually with the optimal time of day. And that's exactly what I was keying off of in today's trade. So once again, up close candle, taking out the buy side liquidity here from the opening range. Optimal time of day, we have a change in the state of delivery below this up close candle in a deep premium, remember, the optimal trade entry zone. And now we're going to go ahead and jump down to the 5-minute time frame. So as shown in the stream, we have sell stops resting below here. So we have this opening range here. We've been rising higher, and what takes place? It trades down to this low and immediately has a nice reaction up off of that. So by default, there's going to be a lot of sell stops resting below here for those that think this is a strong support level. And we saw how strong that support was whenever it traded down here. But anyways, if you look what takes place here, we're in that 10 to 11 a.m. time frame. Why is that important? Oh, silver bullet, silver bullet. No, not just silver bullet. It's just 10 to 11 a.m. A lot of algorithmic principles take place. I'd say about 80% of my trades take place within this time window. And obviously I explained more of that in my group. But anyways, buy side's been taken continuously. Buy stops are exhausted. Without an indicator, we know that we're overbought. Okay, so we have this midnight opening. We're way above that. And then what else do we have? We have this 9:30 opening right here. Extend that out. We're above that. So without an indicator, we're above both openings. That tells us that we're overbought. And we don't just sell for overbought sake and buy for oversold sake. We need proper context and narrative that I just laid out to you. But anyways, real time, looking at the opposing end, we see that we traded down to these inefficiencies. But the important part is we disregarded them and closed right here below both of these opposing inefficiencies. So this right here shows me weakness. And we'd simply just be looking for the next retracement to then short, which is right here. So we trade down with real displacement, disregarding opposing arrays. And then we roll right back up into this 5-minute gap right here. This right here was the highest probable trade that could have been taken this week, in my opinion. So once we roll up into there, you go short. Stop loss goes above the breakaway gap. Aim for the sell side. Discount inefficiency. New week opening gap. Very simple. Now, why is this a breakaway gap? Because we have massive displacement off of a key level. This is the first inefficiency that was formed. They're in a hurry to get to opposing arrays. And it's kind of like a car revving up, and then boom, they take off, lead those black lines, and they're not coming back to those black lines. They're going to where they want to go. Okay, they're not wasting any time. So this candle's high, and then this candle's low. That separation there, this will be the breakaway gap, and this should not be returned to if we're bearish, and that stayed true. So I hope you guys found this insightful and helpful. I'll have more of these posted, obviously, but this is just everything that I used today. Obviously a few more factors, but that was all explained live.